or it's going to be fine. It's just, pulling back with a lot of the others. It's a fintech firm. Archer Daniels, Eli Lilly, really? Okay. Man, that thing's been surging, hasn't it? I missed this one. Lithium Americas. Yeah, these lithium stocks, I mean, is this the one that the government took a 10% stake in? I'm pretty sure it is. Trump's trading track record is pretty good so far. Yeah, and this is just, it's like it was announced that the government took a 10% stake in Lithium Americas. We can debate whether that's right or wrong, but the stock shouldn't double overnight on that news. This is just a FOMO rally, and I mean, it's it shouldn't be worth triple what it was because they gave some equity to the government. So here's the move. All right, it is now 8 o'clock, so we're going to go ahead and begin our live stream here. Welcome. Today is November the 24th. It is Thanksgiving week, so we got a shortened trading week. A lot of news still coming out, so there are some key catalysts here. Now, generally, these holiday weeks, you don't see a ton of movement for the reasons you would think. Most people, especially big Wall Street fat cats, are taking time off. They're with their families, so there tends to be a little less trading volume. Don't expect anything too crazy this week, but what we've seen here, just want to review the last couple of weeks of the market, is a bit of a pullback, and this is totally natural. It is part of the process. Let's keep things in perspective. It is an 8% dip, currently 7% off all-time highs in the NASDAQ, after what was an historic 57% 7-month rally. So we need these pullbacks. Don't let them scare you. Stocks cannot just go straight up forever. That's how you get the dot-com crash and the big valuation bubbles. You need the market to be in check. And what's happened is the leading areas of the market, and we're going to review how to find these, have changed. So markets tend to have themes to them, right? There is generally one area of the market driving these big bull runs. And if you go back through history, we had the dot-com stocks. In the 2010s, we had the big tech stocks. In the 2020 and 2021, we had the work-from-home stocks. The last couple of years, it's been what? AI stocks. And that's how we've seen these monstrous rallies in stocks like NVIDIA and Supermicro that are up, 1,000, 1,500%. And in 2025, after April, after the sell-off, we saw a rotation into other areas. And this on the right side is the watch list we made in April live during one of these sessions. And so a lot of these stocks made huge moves. We got this breakout here in Coinbase at 200. It went to 400. We got Robinhood here at 50. It went to 150. We got stocks like Galaxy down here at 23. It went to 43. And Cypher and CleanSpark. We also had the nuclear space taking off. We bought these breakouts in OKLO here at 30. It went to 90. We bought it at 90. It went to 190. LEU had huge moves, UEC. But what you're noticing on the right side of these charts is they've all come back down. And this is part of the process. We're not getting married to stocks. We're not looking for stuff to own for 10 years. We're looking for stocks so we can make a big, quick gain very quickly, take those dollars and go to something else. And if the market's ugly, we'll go to cash. And you're going to be fine going to cash when you bought SMR and booked 100% gain. When you bought OKLO and you made, what was this? 100% here and then another 100% over here. And they roll over. And so these big drops, when you look at the leading areas and these stocks are down 40, 50%, quantum computing was another huge move, all the way back down. QUBT, ION, all of them have rolled hard. And so that is what has pulled the NASDAQ index at a small 7 to 8%. The S&P has done a little bit better. It's holding up here within about 4.5% of all-time high. So the sky is not falling, it's just rotating. And so what we want to do is focus on the areas that are showing the most strength. And this is really crucial in the market because the way these big institutions invest is they go into a theme. They see, okay, the big area is nuclear. We see a big opportunity in solar energy or in the pharmaceutical space or in quantum computing, and they pile into those areas. And when they do that, those areas rise the most, okay? Our job is to align ourselves with those big institutional investors. And if we are in sync with that, if we're buying the same things they're buying, we're going to do very, very well, because when they buy billions at a time. When the Warren Buffetts of the world decide they want to buy Google, when Ray Dalio decides he wants a big position in nuclear stocks, when Goldman Sachs or the New York City Pension Fund or some big endowment fund, when they're all buying, it's going to go up just due to their size. And so if you can see where they're focusing their efforts, you can do really well. Now, this is an indicator that we've coded up. We include it with our free membership, or our $5 membership, excuse me. And what it does, it tracks 40 different subsectors of the market to see which one is up the most over the last 1 and 2 and 3 and 6 month periods. And when you do that, you can very quickly see where you should be focusing, where the dollars are flowing into. And if you haven't already, there's a link we just put there in the chat to join our Black Ops service. The link is just tradewithross.com, but it's $5 for an entire year. You'll get these live trading sessions every Monday, another live Zoom session with other analysts on Thursday. We'll give you access to this indicator along with the video tutorial library, access to our support team, etc. So tons and tons of value. It's just $5 for the year, no catch. Click that link below if you want to get signed up. But this is something you really need to be focused on. Otherwise, you can do it like this. This is a chart of all those 40 sectors, and you can go in here and look at over 3 months, or look at over the last 1 month or 6 months, and go in here and double click and see what the ETF is and go back and look. But this just makes it a heck of a lot easier, okay? And so what we're seeing right now as the market gets out of nuclear energy, it gets out of quanting, and AI is stalling. Look where the money is flowing. Biotech, pharmaceuticals, biotech, pharmaceuticals, biotech, pharmaceuticals, lithium, 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 lithium. We're also seeing solar energy and clean energy, solar energy, clean energy, solar energy. And so if you just take these leading 2, 3, or 4 groups, put together a watch list of the top 10 or 15 stocks, each of those, and then do what I show you to do today, I can just about guarantee you'll have less risk, you'll win more often, and you'll win bigger, okay? So let's talk about our go-to breakout pattern, because this is something you absolutely need to understand. And it's how we got into QBTS back over here at the lows. It's how we got into QUBT and IonQ and all these big leading stocks that made monstrous moves in here. And the pattern looks like this. So let me take like find a really clean one to show you. All right, this is really good. So let's go back in time here. This is the action you want to see before stock explodes. Okay, and this, what I've drawn here is this little shallowing pattern on the chart. And our good goal is to buy right up in here before it accelerates. Now, what's going on here? Well, again, you want to focus on the leading areas. Now, this was September when this thing broke out, okay? Let me see if I can... Oh, it's not going to work. Okay. Anyway, when you're focused on the right areas, and so this is going to help you do that. You're gonna know what, like right now it's pharmaceutical, right? It's biotechs, all that kind of stuff. But at this time, it was still nuclear. And the big leading nuclear stocks were OKLO, it's SMR, it's GE Vernova, right? I'll show you how to get a list of those. And what you want to see first and foremost is a big rise in this stock. So if you're trying to fight Wall Street, you're going to have a heck of a hard time with trading. Your job is to align with them. Whatever they're buying, you want to be buying. What they're selling, you want to be selling, because right or wrong, they move the market. When they're buying tens or hundreds of millions of shares of a stock, it is going to go up. And so all we're doing is looking for signs that they're building a position in that stock, that Buffett is buying Google, or these guys are buying OKLO. And that's going to take the form of a rise in price. Now look over here to the left. I mean, this stock was up 180% in 38 days. That is big, heavy institutional buying. It is big demand. And so seeing that, we quickly know, all right, this is a stock I want to buy, but I don't just want to buy it anywhere. I don't want to buy and watch it chop around. I don't want to buy and watch it go 30% against me. I want to buy right there precisely where the stock has a good chance of delivering a big and fast gain. And so to do that, after we see a stock on the rise, we want to see that it puts in this kind of shallowing pattern here. And what this is the supply being sucked out of the market. Now, stocks trade based on supply and demand. Yes, there's earnings. Yes, there's news. Yes, all that is true. But all that leads to either supply or demand. Demand is people want the stock. They're buying it up heavily. Supply is they're offloading the stock. They're selling it in mass. Okay, the reason doesn't matter. But it is all based on supply and demand. And so when we think about the basic supply and demand curve, right? If demand is high and supply is low, what's going to happen? The price is going to go up, right? When everybody wants this hot widget and there's only two of them, they can demand a high price. When supply is huge and demand is low, it's going to go down. There's tons of this stuff and nobody wants it. They're going to discount the price. So what this arrow is identifying here is a place where demand is very high, but supply is very low. And so after the stock goes from 20 to 70, it's getting overcooked. Some people are going to want to sell, take their profits. They've tripled their money. And that selling is going to push the stock down. Now, if demand is still high, if the big institutions are still buying, whether it's Buffett or Goldman or whoever else, they're going to take advantage of that dip and buy and push it back up. They're then going to send spoofing orders to kind of shoot the stock down. They may manipulate the news with bearish stories. They may get analysts to downgrade the stock. And there's other people who just say, look, it went to 71, 81s, it fell to 50, it's there again, I'm going to sell. And they push it down. And then again, they're buying it back up. And what happens is this little shallowing effect on the chart. And that is the supply being sucked out of that stock. I call it shallowing because these dips get shallower and shallower as we go from left to right. And the reason is simple. There's less stock. So this dip right here was 33%. This is really important. You got to understand this. It's going to make you a ton of money if you do it properly. This dip over here was 25%. The dip is shallower. There's less supply this time. There's less people selling. It pushes back up. This next dip is only 15%. And listen, this is a stock that's quadrupling, right? These are still pretty big. You'll often see this go from like 20 to 10 to 8 to 3. But it is shallowing. And where is the resistance? It's not going to be to the exact penny, but roughly where's the stock stalling? Here at about 75 or 80. Here, here, here. That's the resistance. That's where the sellers are coming in. And eventually, as these institutions have bought up all the stock they can, if they've gobbled up every stock they can get every share to get their hands on in this kind of $70 to $80 range, once they've absorbed all that supply, if the demand is still there, they're still trying to buy, they're going to have to pay up. Nobody else will sell it at 70 or 80. Would you take 85 or 90 or 95 or 100? That's what causes these big accelerations higher. And the big moves happen when you get a combination of both. Supply has shrank and also demand has increased. Look at volume going up there. And so by doing this, you're buying right here as it breaks out, right here as the supply has shrank, the demand is still there, and then you can ride it for these big acceleration moves higher. And so we can get into how kind of when to sell, but that's 70% in 8 days. That's 120% in 30 days. And you don't have to nail the tippy top. You just get it. Oh, look, I'm up 50% in a week. I'm going to sell some. Oh, I've doubled my money in 3 weeks. I'm going to sell some. Then it rolls over. Okay, so be it, right? So does this make sense, what I'm showing you here? This breakout pattern? Questions about this before we move on? And this tends to happen over and over. Right? If we go back here, we're looking for the same thing off the lows. Now, a lot of stocks, you guys are pointing out stocks to me that are like way down. Like, oh man, this thing's really cheap. It's a good buy here. Great. That's the first half. That's good. You got a good stock, a good story, good numbers, whatever. That's great. But if you want to time your entry, you do what I just showed you. This thing went from 60 to 15. Okay, that's volatile. You need to absorb that supply. The reason it went from 60 to 15 is that supply in February and March was greater than demand. This is when we had the tariff situation going on. Trump's putting 100% tariffs on these foreign countries. Well, this company's not going to sell much if there's a 100% tariff. And so people get scared and they want to sell. That supply. More people want to sell than buy. You need to get through that supply. It needs to be absorbed. Everyone who wants to sell needs to get the heck out of the way if the stock's going to have a chance to run higher. And so then it did, and it came in, and it tightened, and it tightened, and it tightened, and then it broke out and doubled again. And so it makes a big move. You get it in here. It's gone from 25 to 70 in a month. It needs to absorb the supply again. Shallowing, get the sellers out of the way, the profit takers, and it can go again. And what do we have now? Well, we've got a lot more supply than demand. It went from 85 to 185 and all the way back. So what do we need to see to buy this? The exact same thing. To form what's called a rounded bottom. It must absorb this supply. And then when it does so and breaks out, we'll buy it on a move through here. Now, this may happen here. It also may happen down at $10 a share. I don't know. This thing could come all the way down here before it bottoms out. So you don't want to buy it just because it's falling or it looks, quote unquote cheap. You want to buy it when the odds are in your favor. And don't think it can't come down here. This thing could go to 2. There's no telling. This is a pre-profit company. It's trading on a story, on hope, on demand of power for these big AI data centers. So if this is making sense to you, you want to join us for a year, please click the link below. It's tradewithross.com. You get access to us for an entire year for $5. We do these live sessions every single Monday. We have an additional members-only session every Thursday at 9. I'll give you access to our TradingView market health indicator, the industry strength indicators. You have access to our support team. We put some stock recommendations out every couple of weeks. I do a weekly newsletter from me, straight from my desk to you every Friday at 7:30 p.m. You'll get that. Tons and tons of stuff. It's just $5. Can't make it any cheaper than that without going bankrupt, all right? David, I'm the Mark Minervini disciple from 2 weeks ago. Minervini uses RSI 70. Do you use this as a hard rule? So he's not using exactly RSI. What he's using relative strength rating. And the relative strength rating, this is a free indicator on TradingView as well, is what it does is it compares the price action of that stock, how much it's up or down, versus all the other stocks in the market, and it ranks it. So a 98 means it's in the 98th percentile over the last 12 months. Now you're like, what, 98? The thing's fallen out of the sky. Well, yes, that's true. But since November of last year, the thing's still up 330%. Now, it was up 800%. But, yeah, he uses the relative strength score as well as the slope of it. You want to see it increasing. You want to see the relative strength. And if you look over in here, when it broke out, look at this relative strength line. You see very similar action in here. And it broke out through these highs right as the stock was breaking out. So where are we seeing it now? Well, right now, again, biotech, pharmaceuticals, lithium, that's really the strength of the market. And if you want to put the odds in your favor, you want to focus right in there. And so the big lithium stocks, we've got like LAC, which has been suffering but is trying to hold its ground here. What do we want to see from lithium, from LAC to buy? Well, something like this. It's trying. It's starting. I don't know if it's going to happen or not, but so far it's kind of, and look, all it needs to do is a little bit of this and tighten up. You're going to buy right there as it breaks through 5.5, and it's probably going to go to 9 or 10. But this has to complete. You have to, because it could very well do this first. We don't know. Okay, so one of the things that is really paramount to what we do is understanding that stocks move in stages. And has everybody seen this before? I've covered this many times in the past. Some of you may or may not. Is everyone in here familiar with the 4 stages of the stock cycle? This is absolutely the most beneficial thing you could do, or you can understand when trading stocks. So this is a weekly chart of Roku, R-O-K-U, and I've marked out the stages here on the chart. But this is what stocks go, every growth stock, Google, Amazon, Netflix, all the big names go through this over and over. Now, we looked at SMR, OKLO, the nuclear, all that stuff, right? Those stocks are all in stage 4 right now. We had a great stage 2 earlier this year. They began to sell off in stage 3, and now they're in stage 4 markdowns. So we don't want to buy them while they're falling. We want to let them go into a new stage 1, get accumulated, absorb the supply, let the institutions build positions, and then we'll be back into a new stage 2. So let's look at the general index and see what our overall trends are. So we've got the NASDAQ here set to open up in about 10 minutes. It is looking like it wants to gap higher. Yep, it's going to open up around 595, so we're up a little bit pre-market. We had this big nasty sell-off day on Thursday, kind of absorbed a little bit of it on Friday, set to gap up, but we really need to see stocks hold above this level if we are going to continue the run higher. Okay, you can see this big kind of support level right in here from October and November, and if we get a bounce in the next couple of weeks, odds are this market is back in play. We just need to stay focused on the strongest areas. All right. So let's go to the biotech sector, the pharmaceuticals, see what we can find. There's a handful of stocks in here I think are probably going to be buyable very soon. And it really is just this simple. You've got a market still in a decent uptrend. We've identified the leading areas in that market right now being the biotechnology, pharmaceutical, lithium, even some nat gas starting to come up here, clean energy. And so we're just going to run through those stocks to see which ones could be setting up a potential buys. If we're buying stocks, breaking out from a good pattern in the leading groups in a strong market, the odds are we're going to do very well. And so a couple of stocks I was looking at the other day in here, Natera, NTRA. No one told this company that there's a pullback in the market. And if you go back, and this is, I guess, Monday morning quarterbacking here, but if you go back a month, look at this big breakout pattern we had. So you see how this was the big move up from 100 to 180. It then shallows and shallows and shallows. Nice tight little edge in here. And then it breaks out higher. And it very quickly goes from 185 to 230. Look at ROIV here. Very similar pattern. See how it came down and made this low? Do you see the rounded bottom here? This is what you want to see. This nice, shallowing, tightening action right up here. It then breaks out to go higher and quickly jumps about 80%. Over the last month. And so if we can find more of these or ones that are kind of setting up now, we can do very well buying the breakouts on these. I mean, some of these are, biotech's kind of a tougher one because there's so many stocks and these can be very volatile. But look at the uptrend on that. I mean, just incredible. Trying to find something that looks good. Okay, perfect. Bridge Bio Pharma. Now, it's kind of a shorter pattern in here. But can you see what's forming? See the big, strong acceleration higher. It then absorbs and absorbs. It might do this. It might just run from here. So this could be a great one on a break above 69.5. And if we bought it, let's say we buy this breakout here, we only need to risk about 7%. Because what I've shown you, as these shallow, it should not go back beneath there. And so we can run a stop loss just beneath this low here at about $64. That's our risk. If it hits there, we're wrong. We'll take the lick and move on. And so we can buy a breakout in here, risk 7%, And if we're right and it runs, I mean, look, this thing just more than doubled over the last couple of months. So BBIO1, I'll jot this one down. Let's see if we can find some other stocks to look at. Let's see what else we got. Vertex looks good. Don't see a great entry on it. Madrigal. Regeneron is surging. Ionis. Halo, Fold. Okay, look at AbbVie forming in here. Again, it's not a huge pattern just yet, but do you see what's beginning to form here? Do you see how you get the big strong? I mean, look, it went from 180 to 240, comes in, sucks up, tightening up beautifully, kind of a cup with handle type pattern. Absolutely viable on a breakout here through 240 a share. And you don't have to risk a ton of money. You buy it there. We put a stop loss in here. And it's pretty minimal risk. You're only risking about 4.5%. Now, this is AbbVie, okay? It is a $400 billion pharmaceutical company. It's not going to quadruple in a month like these young nuclear stocks or crypto plays or quantum computing. I mean, even this monstrous move here was only about 40%. So, we're risking 4.5. Okay, let's try to make 3 or 4 times that. Let's try to make 15, 20% pretty quickly and move on to the next one. What's happening? Whoops. ACLX, beautiful, right? I think I put this one in Friday's newsletter. Do you see the action here? See how it came in? Big move up. Tightens. See it tightening in here? See this? How we're getting up? I mean, this is just absolute textbook. And so this is a stock that is absolutely viable on a breakout above, let's call it 93.5. All right. So here's how we'd structure that trade. We could probably take this when the market opens. I don't know where it's... Yeah, we don't have pre-market trading on this one, so I don't know where it's going to open. But you can put in what's known as a buy stop, saying if it hits this price, I want to buy it. I don't think we need to risk a lot of money on this. We just put a stop loss right in here. So you're familiar with stop orders? A stop order means if it hits this price, sell it. So a buy stop means if it gets up to here, buy it. A sell stop means if it gets down to here, sell it. Let's see. I'll let the market open. ACLX. We'll go ahead and we'll try to place a trade on that one here in a minute when the market opens up. Questions on any of this so far? You hear Dave Ramsey when I speak, Mary? Oh, no. I hate that. I hate the way he talks. Oh. He has some great advice for people who have no idea what they're doing with money, but man, he is just... He comes off as very pretentious to me. Ugh, I hate it. Mr. Know-It-All. All right. 2 minutes of the market opens. Let's see. What stocks do you guys have here? Hey, from Charlotte, good to see you. Thanks for sharing. Any thoughts on QUBT? QUBT, yes, still in stage 4. So we see the big run up. And these stages are really... So you see the stage 1 here as it's basing, being absorbed. Big stage 2 run higher. This is your stage 3 as it's kind of getting all wacky and all over the place. And then this is your stage 4. So we want to then see this go back to stage 1 and improve. Now, it could happen here. It could happen at 50 cents a share. I don't know, but it's going to need a few weeks to base and consolidate. But if we get QUBT and it comes in and does something like this and tightens up, absolutely, I will buy this thing heavily on a breakout higher. But typically, it's going to take a few months for stock to form a good stage one and get down there and absorb, and it's got to pretty much be forgotten. Favorite stocks, we said GE Vernova. Yeah, GE Vernova is a big nuclear place. The GE spin off their nuclear arm. It's, kind of drifting here. Is CMG getting ready to break out? Chipotle, love their food. I mean, doesn't look like it wants to break out. It looks pretty ugly. It's got a relative strength rating of 3, meaning 97% of stocks have outperformed this one over the last year. So this is definitely bottom of the barrel fishing. Now, your thought might be, hey, maybe it's trying to form a base down here on the low and break out higher. And that could be. I think it's a bit early, but at minimum, I'd want to see another, call it a week or two, absorbing. Like you want to see it hitting against this resistance level. And whether you're talking about support or resistance, like think of it like a brick wall, okay? Like let's look over in here at this area, right? Every time it hits, it's like a hammer hitting this wall. It's not going to break on the first time. If you hit the damn thing enough, it's eventually going to break. It hits and hits and hits and hits and market open, and then goes lower. So it's the same thing on the way up. We want to see it pressing against this, getting buyer action, and then try to push higher. So I think CMG is going to be a great buy eventually. I think it's dirt cheap. I think it's a great company. I think a new CEO could turn this thing around, but it's in a good stage 4 downtrend. All right, let's look at our ACLX trade. Then I'm going to take some of you guys' stocks here. So where's ACLX? Okay, it's opening inside here, so it's not quite there yet. Tell you what, let's do this. I'm trying out this new Moo integration. I'll sell this for now. Let's just try something new. All right, so let's look at ACLX. I want to show you how we structure one of these breakout trades. So we're looking for a buy here above 93.5. All right, so what you would do is then place a buy stop order at 93.5. So what you're saying is do not buy this unless it hits 93.5. Okay? Just pick up like 100 shares. I'm going to make this just a day or, well, I'll make it good till canceled. It's fine. GTC order. And going to click, whoops. Why did I do 99 shares? Hold on. All right, so I've got an order standing there to buy if and when it gets above 93.5. Now, then I want to put a stop loss order in. So the last real swing low was about 87.90. So then I'm going to come put a sell stop order. If and when this thing hits, I'll then come put a sell stop order in at that low, at that, what did I say, 87.75. And then I would hit sell. Okay. So we'll let this thing work. See if we get up there. It's going to take a pretty big surge today. It's possible we'll leave this thing working, but all that's going to give us is a risk of about 6%. And if it takes off and breaks out, we're probably going to get another run here, which in this case does 25 or 30%. So I've got this order. If it comes and fills, I'll just hop over to this chart, press sell, and I'll be in there. Again, guys, if you're just joining us here, we do these live sessions every single Monday. We have a YouTube special. It's $5 for the entire year. Get live sessions with us every single Monday. Another live session every Thursday. Put some trade picks out here and there. We also give you access to these market health indicators, the industry strength indicators, where you can keep abreast of where the strength is in the market, in addition to a video tutorial library, access to our support team, all kinds of stuff. So the link to do that is just Buy with Ross, Trade with Ross, excuse me, tradewithross.com. And the page is going to look, it'll come up like this. So again, $5 the entire year, no strings, no catch. You'll get access to all that, as well as several bonus reports we have inside of here on some stocks we like long term. So $5 entire year, name, email, credit card, cheapest thing you're gonna buy all day. All right. So let's look at a couple others. Dave Ramsey discourages buying. Yeah, I know. Dave Ramsey is a mutual fund guy. He's old school. He likes real estate. He hates debt. Like, yeah, it's easy to do. And you got $100 million and you're buying apartment buildings in cash, Dave. We understand. The man's just a little bit out of touch with reality, if you ask me. Tell people to buy $3,000 beater cars and stuff as if they're not going to break down as soon as they get off the lot. But hey, that's just my thoughts. All right, Kodiak, KOD. Feed me some stocks. What do we got? Yeah, looks great. Now it's a bit wilder, but you see here, if you just kind of look, they're not always going to set up perfectly. So if you have a good market, a leading group, I'll take pretty darn good as opposed to needing perfect. But you see that kind of shallowing. See how this first dip here was 43%. The next dip was only 24%. This next dip in here was only about 13%. It's tightening up. Yeah, this looks really good. I like it. KOD, Kodiak. Tiva. Yeah, it looks strong. It's not setting up in a great breakout pattern, but yeah, both these kind of that fire pattern set up. Eli Lilly, just ripping. I mean, it's not really giving me an entry. This is you'll hear these people say that the stocks look extended. And all that means is, yes, it looks great. It's going up. I wish I owned it, but I don't have a low risk entry point. And so if you kind of look in here, it did what we talked about, how it kind of tightens up here along the bottom, breaks out through here, makes a nice run, but it's gone from 800 to 1,000 in the last couple of weeks. So it is at much higher risk of a pullback in this range. So that's why I like getting in tactically right as it kind of breaks out through here, because then I can get in with a nice tight 5, 8, 10% risk, ride it higher, and I know pretty quickly whether I'm right or wrong. Yep, got a gap up in the Qs, as someone mentioned. Yep, holding so far climbing. So we gapped up here to 595 to 599, looking good. Up 1.6% on the day. So far, our indexes are looking strong. Could be the start of a Santa rally. Let's see here. Oh, yeah, this looks great. Monte Rosa Therapeutics. I mean, look at that. Just nice, tight action right up here at the top. Really pretty. Big move, tightens up, nice little shallowing. This is excellent. Stop at $13. This looks really good. All right, I'm going to keep. Let's just cancel this order. We'll set this up as an alert. Whoops. We'll set an alert. Another nice thing to do with trading view. And I'm just setting this up. So if it happens and we're not here watching it, it'll pop up on our screen. It'll pop up on your phone. Got an alert set there. Okay, so let's do this. Let's go back to glue here. What's that, about it? 11% risk. I think we can do this. Let's go ahead and buy some. I'm going to take about 500 shares at the market. Filled, long glue. Let's put a stop loss order in here. Now, we could give it down here to 1290. I don't know that we need to. That was a pretty big rejection in there and a nice strong move on Friday. I'm just going to put it below Friday's low. So it's going to be 1327 as the low. I'll put it at 1320. So I'm going to put a sell stop order for the 500. Going to make it good till canceled. What did I say? 1320. Put an order into 1320. Now, this is not a big position, okay? Just getting up 500 shares. I just want to show you guys how I'm doing this. So 1327 right in there. Okay. So we are long from 1456. Got a terrible fill. Okay. Currently at 1468. So making a little bit of money here. Let's see if this thing will run, because it should. If we go into a 5-minute chart, let's see what we got. Oh, yeah. See how clear that is on the 5-minute chart? I mean, right when we open, just boom, 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 gone. So it was a nice little resistance level where it was stalling Friday into the close. Right in here. And it's just popping through higher. But so what we have is a nice little pattern here on the daily chart. A nice little 5-minute resistance level. It's great pick, by the way. That's Tyler in there, one of our analysts. I appreciate him sharing this pick because he does a lot of the research I don't always have time to do. And so all we've done is say, all right, the market looks decently strong. We're gapping up. The leading group is Biotech over 1, 2, 3, and 6 months. That's clearly where money's flowing. This is a top stock in that group, breaking out of a pattern to new highs. We're going to take a little piece of it. And if we're wrong, okay, we'll take a small 10% hit here. That, it happens. We never know. We're going to get a massive sell-off day like we had last Thursday, or, some big tariff information, or God forbid Trump pulls out his phone and tweets something bearish. The market's going to react immediately. But we'll check on this one, see how it performs. What else we got? LAR. Lithium Argentina. So lithium, yeah, great area. Now, I don't love buying this one. It does look like it wants to go higher. I'm not going to buy it here because I don't know where I'm wrong. And what I mean by that is it's just still very volatile. Like, this price action is widening. It's just super all over the place, down to 3.5 to 5.5 in 2 weeks, and back down again. Just in the last 2 trading sessions, it's down 15%. So do I like it? Yeah. But do I have a nice buyable pattern? Not really. This one wasn't perfect over in here, but it was at least better. Like when this thing broke out, notice we had the big move up, and then it was coming in and tightening and kind of shallowing. Could have bought it in there, put a stop loss in there. It still would have been a decent amount of risk. It'd be about a 15% risk, but it never hit your stop, and it surged, and it went up, 40% over the next 20 days. It came back, it retested the breakout area almost perfectly. Nice little retest buy in here. Accelerates again, but now, again, it's just kind of extended. So it looks good. Is it a great buy point? To me, with my strategy, not really. AVBP. Oh, yeah. Now we're talking. So this is, this is one kind of trying to come off the lows, but this is a great, exiting stage 1 entry point. See how the stages work. So big stage 2 uptrend. Then it starts selling off in a big way here, getting whippy. That's your stage 3. Big stage 4 downtrend. Then just consolidate. But now it's trying to come in and tighten up here off the lows. So over the last 4 or 5 months, kind of forming a stage 1 in here. And so if we can break through this $22 area, maybe this is the start of a new stage 2 that can push this thing back for a run to the highs. Okay, so big picture, near term. Big picture being the market, focus area being the sector, and then breaking the chart down to get good entry points. How would you quantify a move out of a top 5 leading group? Can you clarify that just a little bit, David? Not quite sure. Dave says UNG. Yeah, I love natural gas here. Listen, the case for natural gas is super crystal clear, okay? AI is the big boom. The data centers do not have enough juice to power this. The grid can't handle it. There's a big push to energy right now. I've got 25% of my retirement dollars allocated to the energy space, and that's why nuclear stocks made such a huge move this year. Nuclear is a renewable, clean solution that makes sense. It's got a small footprint. They can build these modular reactors next to the data centers to power them, and those stocks went 400-500% higher. But as is the case with these big runs, stock trade just on a story, it went too far too fast. Now they're rolling over. The short-term solution to this, and the CEO of OpenAI has said this in multiple interviews, is going to be natural gas. We have plenty of natural gas. You can pipe that stuff in and power these things. And so natural gas, which has been getting brutalized for the last 8 months, is now getting legs and starting to go higher. And you can see that demand is increasing just by looking at the volume down here as it's been kicking up. Look at these big high up days in UNG. And so this is UNG, I don't remember, is this natural gas stocks as well as, no, this is just natural gas as a natural gas contract. Okay, this is just the commodity natural gas. Okay, but it didn't do a perfect, shallowing bottom in here. But you can see, again, it's still getting deeper and kind of tight. So it's a little sloppy, but it is kind of forming this stage one base and then trying to get legs going higher. So I would probably prefer some natural gas companies to get a little more leverage on the play. But yeah, natural gas will be very strong. Goodness, that thing scared me. I've got this new box behind me that shows stock tickers. I need to put it up there so y'all can see it. And it updates every 15 minutes. How's our trade doing? Am I making any money? Yeah, I make a little bit of money. Up $240 on this thing. Nice clean acceleration through. Up 3% and counting. I've only been in this trade about 5 minutes. And if this thing really gets moving, if we get up 5, 8, 10%, what I will then do is just bring my stop loss up to the low of the day. I'll just choke this thing off. So we'll get our risk down to like a couple of percent. Because if this is a true breakout, if it's going to run from here and not look back, it should not revisit the low of the day. Now, so far, we don't have a ton of volume on this thing. It's only seen, where are we at on volume? 118,000 shares traded today. Average is around 900. I guess the real average is more like, 800, 100 a million. But still working pretty well. It's only been a couple of minutes, up $350. We'll come back and check on this one in a minute. All right, let's look at some other stocks you guys have. By the way, if you haven't already, click that link, tradewithross.com to join our membership. It's $5 for a year. You get 2 live sessions, one with me, one with our analysts for an entire year. We'll give you access to smart. I cannot tell you how valuable this is to know at any given time and very easily see where the strength is in the market. We'll give you access to these indicators as well as some picks in my weekly newsletter I put out every Friday. So click that link, tradewithross.com. It's just $5. Nothing to it. Let me pull up my YouTube here. See if I can pause this. There we go. I can pause these ads for a second. Okay, I keep forgetting to do that. All right. Are we doing stop limit or stop loss orders? I'm a bit confused on when to enter ACLX. Okay, great question. So there's 3 types of orders. One's a market order. That just means at the market. Buy now, sell now. All right. Then there's a stop order and a limit. A limit order is an or better order. So if you say I want to buy limit, that means I'll pay this price or better or lower. A sell limit, I want to sell here or higher. A stop order is an if triggered order. So like this stock's trading at $15. Let's say I'll buy it if it goes to, let's say 18. So you put a buy stop order at 18. It's going to buy if and only when it hits there. When you're selling, your risk is almost always going to be a sell stop order. It means if it comes down to this price, then sell it. The stop is the trigger. It needs to hit that. So I bought this thing at the market. You could have done a buy stop if you're waiting on a breakout. My sell stop means if it gets down to 13.20 and only if, sell it. This thing's running pretty good, up 5%. I'm going to tighten up the risk. So I'm going to bring my stop all the way up to here at the low of the day. Just beneath the low of the day. Let's call it 14. What's the low? 14.19. All right, put this thing at 14.10 or so. Just a couple pennies below there. 14.11. That's fine. Tighten that thing up. All right, so now we're up 5% on this. Our total risk, if it just sells off and reverses, is a whopping 3%. So what we've done is improve our worst case scenario. NASDAQ's still looking good. Got a gap up and so far pushing higher. So kind of holding in here. Now the Dow is a little weaker. S&P somewhere in the middle. NASDAQ strongest. I'm guessing that means we're getting a run in tech. How do you set up a trading password? When you, like Moomoo has that, when you open your account, you just set a password for it. It's essentially so, somebody can't just jump on your computer and buy a bunch of stocks. But it'll save it for a few weeks in there. Let's look at some others you guys are mentioning, because I want to see if we have some good ones. Whoops, Sana. Okay, yeah, so this is in the right group, but the stock looks terrible. It's down 50% since October. Now, on the other hand, and I hate to, keep going, woulda, shoulda, coulda. I'm not saying I'd have seen this, but I just want to burn this image into your head. See how this last time it came down, very similar move, roughly cut in half. It did so and then began to absorb and tighten in nice little 4 or 5 day shelf. See that? And then it breaks out and surges. That's what I want to see to buy, because I'm trying to put the odds in my favor. This may be the bottom. It could bounce from here. I don't know. But you're really just guessing, trying to catch a falling knife in here. Biogen, yeah, this stock ripping. Again, kind of a pretty decent entry over in here a couple of weeks ago. Which is why, again, if you've been watching this and you see Biotech leading for the last couple of weeks, you'd have spotted all these in real time. But see how it was coming in? It had a big gap down. Look at this day right here. Gap down, opened up here, boom, shot all the way up to here. Very strong action. Very good tennis ball bounce, strong stuff there. This was known as a shakeout move, and it can actually strengthen a setup, because here was really the setup. But this shakeout shoots right back up. I mean, all we're doing is looking for clues. We're looking for clues that a stock is being bought. There's big demand. And when a stock gaps down on earnings 5% and then just soars up 8, 10% on the day on above average volume, that is telling you there's massive demand for this stock on the chart. And it's once this thing finishes and tightens, and look at these dips, they go from 11%. This one was, I guess, about 9%. Then this next one here is only about 4%. Look at these last few days. Nice, tight little 3%. So then when it breaks out here on this candle, that's when you want to buy it. And it surged. It didn't whip back and forth. It didn't come down to your stop loss. It just ran. It just accelerated. That's what we're looking for. So all we're doing is just putting the pieces together of a puzzle. We're taking top to bottom to get everything we can in our favor. We're going to take a look at the 3-step process. General stock market. Yes, it's pulled back 5 or 6%, but are we in a bull market or a bear market? Clearly a bull market. We're up 40+% on the year. Perfect. I want to be buying stocks. Where do I focus? Well, I'm going to go over here and see where the money is flowing. What are the big institutions buying? Where's Wall Street putting their bets? Whatever they're buying is going to go up, so I just want to follow along. Well, they're buying biotech and pharmaceuticals and these clean energy. See, natural gas, energy, clean energy, lithium, solar energy, clean energy, solar energy. Like, clearly that's the plays. Biotech and pharmaceuticals and the clean energy move. Okay, let's focus there. So you can buy just the clean energy ETF, ICLN if you want, but the easier ways are to focus on the right names. Look at the individual stocks in that group. What are the big clean energy stocks? Well, I've got a list here. You can make one as well. Just Google the stuff, look for the ETF, and see what stocks they're holding, and go through these. This one looks terrible. Look how good this one looks. So again, clean energy's been leading for 2 months. All right, so you're over here in September. You go through your clean energy names. You're seeing this stock that has made a big run. It's up 50%, then it shallows, and it shallows, and it shallows, and it tightens right up, and you buy the breakout. A plus B plus C equals profits, okay? People try to overcomplicate this. They pull these needle in the haystack stocks out of some Reddit board. They got 17 different indicators on their chart. Let me tell you something about indicators, folks. They all come from the same 3 pieces of data: time, price, and volume. That's all there is. This stock traded this many shares at this price at this time. That is all there is. That's it. All these 7,000 plus indicators come from those same 3 pieces of data. So you don't need 87 different lines and levels and support and all this garbage on your chart. I'm telling you, I've been doing this for 20 years. I used to be one of those guys. This is what's on my chart now. If I'm feeling frisky, I'll put a couple moving averages on there. That's all you need. Everything else is just noise. Why wouldn't you use a trailing stop loss? Well, you could. I mean, we're only up 4 or 5% on this thing right now, so there's really nothing to trail. If we get up, 20, 30, 40% of things on a move, sure, you can trail it at 15 or 20% behind the stock to give it room to move. I tend to just do it manually. So, for example, if I'm on this, and let's just pretend it really gets going, and I'm looking at this thing a couple weeks later, and it, comes up, is it here? It does a natural reaction, starts going higher. Okay, at that point, I'll take my stop and move it up to here. And, I'm just trying to keep it behind support. If I get a huge move, if I get like a 15, 16%, 20% day, I'll probably sell half, take some profits off, nail some down. Somebody mentioned Minervini. He's one of the best that's ever lived. I mean, I learned a lot of this stuff from him. He always talks about improving your worst case scenario. When we entered this trade, our worst case scenario was we were going to lose 11%. Now our worst case scenario is we're going to lose 3%. If I get up 50% and sell half and trail my stop to there, then my worst case scenario is I make 20%. And we're just trying to make it better and better and better. Dang it. Y'all are calling me Dave Ramsey. I hate it. Now I got to do some voice coach lessons and not sound like Ramsey. So these folks out there at $800 car payments, I hate that guy. Screen freeze. Okay, we back here. All right, what else we got? Sorry, somebody said that thing went fuzzy for a minute. ACLX stop limit. So again, if I was putting this, it would be a sell stop, not stop. You could do a stop limit on the way up. Yeah, so the stop would trigger it and a limit would put a limit on how much you pay for it. This thing looks really good as well. It's just, if given the choice, I want the bigger mover. Okay, if you look up here at the top, see I've got this little indicator, the ADR percentage. See this right? Can you see that in my chart? Let me see if I can blow it up. See it up, whoops. Let me get this stuff off. See up here in the top of the chart, ADR percentage 4.42. ADR stands for average daily range. So looking back over the last 20 days or so, how much does the stock typically move from low to high? And the average is about 4.4% on this stock. Now, if we look at Glue, the one we bought, the average daily range of this one is 7.92%. If you look at a slower, give me a boring like Walmart, 1.8%. And so my goal as a swing trader is to hold this anywhere from 8 to call it 20 days, like 1 to 3 weeks is where I want the bulk of the move to cover. That's really what I'm looking for. Okay, so if I figure, all right, well, if I'm looking for this thing to run for 10 or 20 days, and on average, low to high, it moves 1.8%. Even on a phenomenal run, over 10, 15, I'm only looking at 15 or so percent. On the other hand, this thing's moving 8% a day, and I get even 4 or 5 good, runs there, that's 40%. This thing can go. So you want to look at your risk in relation to how much you think you can make. A stock that's just gone from 5 to 15 is a mover. This thing has tripled since September. So it is well within the possibility here. We could see a 40, 50, 60% gain on this over the next, call it 1 to 2 months. The odds that's going to happen in Walmart, just about zero. So if I know I'm targeting 40, 50%, I'm more comfortable risking 10 or 12. If I'm trading Walmart and I'm going a big move is 20%, I only want to risk 4 or 5. So when evaluating these stocks, if given the chance between one breaking out with a high average daily range and one that's much lower, I'm going to pick the higher one. All right, I want to make as much as I can. I sound like Mr. Ed. I don't even know who that is. The horse? Oh, gosh. NKTR. Yeah, it's, it's in a base. It's just not really showing any direction there. Just really going sideways. Thoughts on MP? Yeah, I just don't think it's ready. I mean, MP is the rare earth stock. It had some huge moves earlier this year with deals with the Department of Defense, et cetera. This was really fueled by the tension between China and the U.S. China controls, don't quote me on this, but somewhere between 80 and 90% of global rare earths. We weren't getting along. This is the only one here in the U.S. that has access to it, so it was a big story trade, but it's rolled over in a really big way. I mean, it doesn't look like it, but this is a 50% drop, folks. 49% in 24 days. So maybe it sets up again here, but to do so, I'm going to Old Faithful. This is what I want to see, and I don't care if it happens here or it happens then at $10 a share. I need it to show me signs that it is absorbing that supply. And once it does so, and it's made its resistance clearly known, then sure, I'll buy the breakout. I'll put a stop loss here. Do you apply ATR to start of the day? I mean, the ADR, look, you can do that. Let me see. Which one is this? Somebody coded this one up. Favorites. There it is. See it right here. ADR percentage, ATR, LOD by this Armor Schluck guy. It's a free indicator, so you just add it to your charts there. But it's just the average daily range over the last however many periods. So I've got it set to the last 20 periods. That's 4 weeks, 5 trading days in a week. LOD, that's the low day distribution, so it just shows based on the average how far from the low is it up. I don't really pay as much attention to that, but. Okay, what else we got? UNG. Yeah, we talked about UNG. I mean, look, I think it looks good in here. It's forming this low. I think what it's probably doing, it kind of like has two, well, it's sort of forming in here. It's not a perfect pattern, but it does have that big kind of rounded bottom. See how it's going to tighten up in here. So yeah, I could absolutely make a case for buying natural gas. The story is crystal clear. You know, it's going to be used. There's an energy shortage, especially in the AI space. Nat gas is a clear player. I'm actually going to do a video probably on natural gas in the next couple of weeks. I'm hugely bullish on energy. So yeah, absolutely. I think you can buy natural gas. You can wait for the breakout. You can buy it in here, but it's showing the signs of an early reversal to go higher. Yes. Solar Edge is going up again. Yeah, this one's been kind of disappointing. I mean, you see, I still think it's a good place to buy Solar Edge. If we look at the market health, you can see, although it has fallen back on the 1 month list, but we do see clean energy. We see solar energy here in the 2 months leading. We got clean energy. We got solar energy. We got solar energy. We got clean energy. So tons and tons of activity in this space. So I'd still like solar. The reason I like Solar Edge, if we go to a weekly chart, and remember our 4 stages of the stock cycle, what do we see here? Well, we've got a big, huge, this was a big stage 2. This was probably a long, I mean, I guess you could say this is kind of stage 3 and 4. It's just a really long, choppy period here, but this was clearly a big stage 4. And so then you're putting in a new stage 1 base, and the idea is this process repeats all over again, all right? So we zoom in here on the weekly chart, and again, it's not perfect, but we are seeing that kind of activity where it tightens up and tightens up and tightens up. So look at the breakout here. So it kind of runs. It had an ugly week. It's kind of pulling back, but big picture, you know, I'm looking for this thing to go to $100, $200, $300 a share. It's $35. So this is not like a day trade I'd be wanting to put on, but the big picture here with Solar Edge, if you're trying to catch, you know, a multi-month or potentially multi-year move, this is a really nice place to do it. Now, on the daily chart, it's still being a little bit whippy. See, we had some progress. That's that retest I talked about. See, the breakout, retest, pops higher, sells. Like, it's just kind of volatile. So it's not acting exactly like I'd want it to. But, you know, there's 100 ways to skin this cat. But big picture, it is still trending higher here. and you are kind of in the lower side of this channel. So I don't think it's a bad place to buy Solar Edge. It's just not one of those super precision daily chart perfect entry points where I can risk 5, 8, 10%, but I do like it. I know it sounds like I'm talking out of both sides of my mouth. It's just people have different time. Like day traders are trying to risk 1%. Swing traders like myself are trying to risk 7, 8, 10%. Position traders are trying to risk 20 or 30%. And the Warren Buffetts of the world will risk it all because they're trying to hold for 10 or 20 years. So it just depends on your time frame. And this is a lot to cover in one day. I understand that. That's why we have that membership. If you guys click that link, it's tradewithross.com. It's a YouTube special. It's just $5 for the entire year. You'll get these live mentoring sessions every Monday with me, another one on Thursday with our analyst Jean, access to these market health indicators and the industry strength indicator, my weekly newsletter, as well as some stock picks here and there, access to our It's $5. I can't make it any cheaper than that. So if y'all are interested, I had the $5 membership, never received the newsletter. How do you get it? Okay, you should be getting it. I'll show you what it looked like this week. I'll go to my own inbox. So it should look something like this. It's going to come, look at your, it comes every Friday at 7:30 p.m. Eastern. I'm on Central Time, so it's 6:30, but this is the one I did this Friday. We talked about what's going on in the market, why it is rare when the market has one of those days we had, so we kind of dove into that. And then I talked about the strength we're seeing in the market, the Biotech ETF, how strong it is going there, and featured a couple of these stocks. One was Cogent, COGT. Other was ACLX, that stock we put that buy on this morning. So I just try to help out. These are going to vary week to week, but I try to show you what we're seeing in the market, where potential strength lies, give you a few stock ideas here and there. So if you're not, just send an email to support at tradersagency.com if you're not getting it, but you should be getting that. Check your spam folder for Friday. See, this is COGT, which I mentioned, buying the breakout here. Look, this stock's up 4.5% today. So this is the one from that newsletter I put out on Friday. And see here, I talked about like a couple of stocks. One would be COGT. Factor drifting higher, it's likely start of a much longer run. And of course, it's continued to run here today. So I just try to give you some ideas to help out. How's our other trade doing? Kind of stuck in the mud here. Nice little run, consolidating a little bit. Okay, let's see if it'll get legs and keep going. We're only about 35 minutes into the market, but hopefully this is the start of a nice little runner for the day. If not, we'll cut it off, take a few $100. No big deal. Okay, I'm looking at the chat here. NVIDIA. Yeah, NVIDIA is the market at this point. NVIDIA really is just starting to look toppy to me. And that's a bit scary, obviously, considering its weight in the indexes. But the worrisome thing is that it reported earnings this day here. They were great. It gapped up and then immediately sold off. And so it's looking pretty long in the tooth. Investors are kind of saying, okay, we're going to take our profits. We're going to get out while the getting's good. I know you beat earnings. I know you beat sales, all of that. But I just kind of want to start to reduce my exposure here. So this is largely, if not completely, responsible for the pullback we've seen in the market over the last 2 weeks. NVIDIA at this time is 14% of the NASDAQ index. It is 8% of the S&P 500. As goes NVIDIA, so goes the market. And you'll see some of the same stuff here in NVIDIA. Like if you go back in time and look at some of these setups, like the same pattern I've been teaching you today. Like look at this. Hold on. Look at this move back here. And this is the end of 2023. So this is not as if you had to spot this thing early. This is very late in the game. The stock was already up 300 or 400%. But look what it did here. I mean, it's exactly what I've been showing you today. Big move from 20 to 50. Begins to come in. Still not getting shallower. Still not ready. Oh, there it's shallowing. There it's nice. Now we're going to get a nice tight little action, and it breaks out. Resistance was clear as day. Helen Keller could spot this stuff, folks. The damn thing can't get above 50. Stalls here at 48. Stalls here at 50. Stalls here at 50. Like when it gets through, you buy. And your stop loss on this trade, you didn't even need to risk a lot of money. We're buying a breakout through here. Your stop loss is where? At the swing low. Always the last swing low, right in here. That's your stop loss. So you had a risk of a whopping 6.5% on the leading stock, in the leading group, in a record strong bull market. 6.5% is nothing. And look what this thing did after you bought it. Right? And don't say, oh, well, that's NVIDIA. That's stock. No. Look, I'm not talking. If I was in here saying, well, if you bought it here at the lows in 22, yes, that would be pure luck. But by the time we bought this thing, by the time you bought it, it was already up 350%. Everyone knew NVIDIA was a leading stock. This is not like, oh, if you'd have got in early nonsense. You're just following a very clean breakout pattern. Here's how I would have done it. I'd have bought it right in here. It comes up, it tightens up, breaks out again. So I'd have raised my stop. Whoops. I'd have raised my stop to right in here at that point. It goes up, little correction, makes a new high. Perfect. I'm going to raise my stop to here. It goes up, stalls for a week, breaks out higher. I'm going to raise my stop to here. And just let the thing play out. And boom, I'm out in there. Okay, so I'm out for a 52% gain in 3 months. Really, really simple. Nothing complex about this stuff. You just have to follow some rules and use logic. Top to bottom. Good market, good group, good stock, and then follow a nice tight pattern. Is nuclear safe for long term? So the industry, yes, the industry is going to do better and make more profits and more sales. The problem is the stocks priced it all in already. So this is a nuclear ETF. Like, it's made a big run. And you can do this also in ETFs, by the way. You can do this in Bitcoin. It's just supply and demand. It's going to work any stocks. There's the breakout. So it is repricing because the SMRs and the OKLOs, a lot of these, they have they're billion-dollar companies with $10 million a year in sales. Like, they're being priced based on assumptions and hope and dream going forward. Intel. Yeah, I mean, Intel looks fine. It's. I've heard they're doing good things. They obviously have not participated in this bull market. NVIDIA just knocked them out of the water. So it wouldn't be my favorite. LQDA, look at a couple others. Liquidia. What is this thing? Pharmaceutical, $2 billion. Okay, just haven't heard of it. All right. Yeah, I think this is looking good. Really strong at the high. You're probably going to see it, stall for a bit more here, absorb that final bit of supply, and then break out and go higher. Yeah, I think it looks good. Got kind of a cup with handle pattern right in here. Sure. Do you have time to analyze DFEN? What are your thoughts on aerospace and defense in general? So this is the aerospace and defense triple long. You're aggressive. It's hard to say. Like, we're not seeing aerospace and defense as a leading area. I like to focus on the leadership. There's 8,000 stocks. I want the best of the best of the best. I want the leading group. I want the top stock in that group. Like, that's the secret. It's not finding this little 10-cent needle in a haystack you get lucky on. It's just getting the best of the best. Like, these are your hard-earned dollars. You had to work. You get paid. Then you get taxed on it. Then you delayed gratification of buying something cool. And then you're investing. Then you're taking more risks on those dollars. Like, I'm not going to do that unless it is something phenomenal. I want the best stocks. I want the most momentum. I want the top group. So that's just me. It's hard to say. I mean, obviously it's pulling back. There's a triple leveraged ETF. So it's down 30%, which means the defense sector is probably down around 8 or 10. Obviously, I think the bombs are going to keep dropping. I think our corrupt government, no matter who's in charge, is going to keep shipping all our hard-earned dollars overseas to blow each other up. I think the military-industrial complex is going to keep their fangs in our politicians. So, yeah, probably this is not how I want to make money personally. So I don't focus on it a lot. If it's a leading area, I would. But, some of this gets into like war profiteering, which just is... I'm a capitalist. It's hard for me to say. I don't want any piece of that money personally. IRON, yeah, looks great. I think, if I'm not mistaken, this is an insider trade, but in Biotech, was this an insider trade? No, we did this once in the insider effect. But look at how everything lines up. Like, look at the technicals in here. So you've got insider buying. You have a stock, but it's coming. I mean, just this big. I mean, this is the big picture one, right? But you also could have looked down here on the lower. Just about as clean as it gets in there. The big, whoops. The big drop, and then shallows and tightens as pretty as can be. Buy the breakout here at 50. Now you're up 80%. I mean, really good. So comes up, stalls, little flat base, breaking higher. Looks great. Looks wonderful. Yep. What about ANNX? Whoa, big mover. Just a small cap stock, 600 million. Obviously, some kind of news came out on this day, propelling the thing higher. It is absolutely extended. I'd be a little scared of this one. I mean, this thing comes out here on Thursday, goes up 15% in the morning and drops 20% in the afternoon. Having said that, I mean, clearly money's flowing into it. It's just, it's riskier to buy after the stock is up 50+%. You are at the mercy of a pullback. I mean, that was a 20% drop in there in a single day. So, not really the area I tend to traffic in, but somebody likes it. It looks like it's doing well. Ondas, yeah, this looks nice. It looks like it's finally absorbed that supply. So, it's falling. Okay, now we're getting some legs. We're compressing. We're holding our ground. So yeah, could be a move through 8 up to here. Now, I'd like to see it personally, just for me. I'd like to see it tighten up a bit first. Because at this point, if I buy here, my stop is where? Down here, it's 26%. I'm not risking 26%. So you probably have to just either buy it and just arbitrarily put a stop at, say, 10% or something. Or in an ideal world, it'd be great if we had a couple of days of trading where it just kind of came in here, tightened up, absorbed that supply, then broke out. And that way I can put my stop like right down here. But, if you don't have a backstop, there's not a clear place to put your stop loss order to limit your risk, just throw it in there at 10% or so. Put it at the low of the day if it gets moving. All right, still only about $300. So glue seems to have stalled on us this morning. We'll see if it continues to run in the afternoon. TNDM, we'll look at one more. Tandem Diabetes Care. Yeah, I mean, this thing's rocking. If you just want to hop onto a rocket ship and trail a stop, you can do so. I don't tend to do it that way. I've, walked through my process. And I just, look, I'm a chicken. I don't like big losses. I won't take big risks. I need to know where I'm right and where I'm wrong. And, if I buy a breakout and I'm risking 7 or 8%, I'm not taking a big gamble. I know immediately where it should go. I mean, we look at the stock we took this morning. We know that when it clears through here, it should run. And it did. 1, 2, 3, 4, 5, 6, 7, 8, 9 days going nowhere. It hits our magic line and runs. So this is what it should do. If it's going to continue to work, it should continue to go higher. It should not revisit the low of the day. So I'm now down to a 3% risk. Who knows what this thing's going to do? Maybe it goes up 10, 20, 40, 80%. We don't really know, but all we can do is just let the stock trade. We know what it should do. We know the actions when a stock is topping to look for. If you haven't seen that, I got a video on when to sell. Things like a triple ADR day, when you get the biggest high move on the biggest high volume, is a good place to sell. And so there's there's places we historically want to take profits to take advantage of that. So, and if you haven't already, click the link. It is tradewithross.com. You can sign up for our Black Ops service. It's $5 for the year. Live trading sessions twice a week for an entire year. My weekly newsletter every Friday for a year. Access to our industry strength indicators, our market health indicators, so you know where to focus your efforts. Tutorials, other access to our team, support staff. So tons and tons of value. It's just $5. Click that link to join us. And if you do, I will see you here live next Monday at the same time in the same place. You also have a live session coming up this Thursday with other analyst, John Fadday. So we'll go ahead and end the stream here. I appreciate you all being here. Hopefully you learned a lot. And if you're watching this recording, feel free to put your questions down below this. They do pop up on my phone. I will see them as they come in, and I try to answer all of them as I see them and try to help any way I can. So thank you all again. Go to that link, get signed up, and I'll see you.